Have you ever wondered where the concept of stock trading originated from? The roots go deeper than you might imagine. Our journey starts in the 16th century in the bustling city of Antwerp, Belgium. Here, the world's first stock exchange was established. This wasn't a stock exchange as we know it today, with electronic boards flashing numbers and brokers shouting orders. No, this was a quieter, more subdued affair, where merchants and brokers would gather to trade not just goods, but debts and contracts of exchange. This was the first step in a long journey that would forever change the face of finance. But the true revolution was still to come. Fast forward to the early 17th century, and we find ourselves in Amsterdam, home to the Amsterdam Stock Exchange. This was where the concept of trading in shares of companies was introduced for the first time. The Amsterdam Stock Exchange was a game changer. It allowed individuals to buy ownership in a company and share in its profits or losses. This was a radical idea at the time, and it paved the way for modern stock trading. At the heart of this revolution was the East India Company, the first company to issue stocks and bonds. The East India Company was a global trading behemoth, with its tentacles reaching into every corner of the world. It needed vast amounts of capital to fund its ambitious expansion plans, and it found a way to raise this capital by selling shares to the public. This was a win-win situation. The company got the money it needed, and the public got a chance to share in the company's profits. And just like that, the stock market was born. It was a simple concept, but one that held immense potential. It was a concept that would go on to shape the world of finance as we know it today. It created a new way for companies to raise capital and a new way for the public to invest their money. It was a revolution in the truest sense of the word. So, the concept of the stock market was born, and it was set to revolutionize the world of finance. As the centuries rolled on, the stock market started to take the shape we recognize today. The evolution of the stock market can be traced back to the formation of the London Stock Exchange in the late 18th century. Born out of coffee houses where merchants and brokers would meet to conduct their business, it quickly became a central hub for financial trading. The London Stock Exchange introduced a formal system of trading stocks and commodities, setting the stage for the financial markets we know today. It pioneered practices such as listing companies, setting regulations for trade, and establishing a system of brokers and jobbers, precursors to today's market makers. A century later, across the Atlantic, the New York Stock Exchange was born. Initially, it was a simple agreement among 24 brokers to trade stocks under a buttonwood tree. This buttonwood agreement, signed in 1792, was the seed from which the mighty NYSE grew. The New York Stock Exchange soon became a bustling marketplace, setting the tone for modern financial trading. With these exchanges, a new era of financial instruments and practices was ushered in. The stock market became a place where companies could raise capital by selling shares to the public. In turn, investors could potentially make profits through dividends or by selling their shares at a higher price. This was a game changer, democratizing wealth creation and allowing ordinary individuals to participate in the economic growth of their nations. But it wasn't all smooth sailing. The stock market had its fair share of turbulence. The most notable of these was the Wall Street crash of 1929. This event sent shockwaves around the globe, plunging the world into the Great Depression. The Wall Street crash was a stark reminder of the risks inherent in the stock market. It exposed the need for greater regulation and oversight to protect investors and maintain the integrity of the market. This led to the creation of the Securities and Exchange Commission in the United States in 1934. The SEC was designed to restore investor confidence by enforcing transparency and accountability in the marketplace. In the aftermath of the Great Depression, the stock market underwent significant changes. New rules were implemented to prevent market manipulation and fraud. These changes helped to rebuild trust in the stock market, paving the way for its continued growth and evolution. The stock market has come a long way since the days of trading under a buttonwood tree or in London coffee houses. It has weathered storms and navigated through periods of uncertainty and change. The stock market has not only survived these challenges, but has adapted and evolved, becoming an integral part of the global economy. Despite the ups and downs, the stock market continued to evolve and adapt, shaping economies worldwide. And as we'll see in our next scene, the advent of technology would bring about a new era in the history of the stock market, revolutionizing the way we trade and invest. In the blink of an eye, we've arrived in the 21st century, where the stock market has been transformed once again by technology. The internet and digital technology have had a profound impact on the stock market. The days of trading floors buzzing with brokers jostling and shouting out orders are becoming a thing of the past. Today, the stock market operates largely in the digital realm. The emergence of electronic trading platforms and online brokerages has revolutionized the way we buy and sell stocks. These platforms offer real-time trading opportunities from the comfort of our homes or offices, or even while on the move, thanks to mobile technology. They've democratized the stock market, making it accessible to millions of people who previously had no way to participate. Now, anyone with an internet connection can be a trader. Meanwhile, the rise of algorithmic trading has brought a new level of sophistication to the market. Algorithms, or algos, are used to execute large orders quickly and at the best possible prices. They can analyze market conditions in milliseconds and make trades far faster than any human could. This high-frequency trading can cause dramatic swings in stock prices, creating opportunities for profit, but also increasing the risk of sudden market downturns. In addition, social media has become a significant influence on stock trading trends. Information, opinions, and rumors can spread like wildfire across platforms such as Twitter and Reddit, driving rapid changes in stock prices. The GameStop saga of 2021 is a prime example of how a group of retail investors communicating via social media can take on Wall Street and win. And speaking of retail investors, their rise is another defining feature of the stock market in the digital age. Enabled by technology, these everyday individuals are taking control of their financial futures, investing in stocks and contributing to market movements in ways that were unimaginable just a few decades ago. In the digital age, the stock market has become more accessible than ever, but it also continues to present new challenges and opportunities. So, from the humble beginnings in Antwerp to the high-speed trading platforms of today, the stock market has come a long way. We have journeyed through time, witnessing the birth and evolution of the stock market starting from the 17th century. The establishment of the first stock exchange in Antwerp laid the foundation for a financial revolution that would forever change the world. This was a place where buyers and sellers could negotiate deals on commodities and bonds, a novel concept that would soon spread across the globe and evolve into the intricate system we have today. Fast forward to the 19th and 20th centuries, we saw the stock market begin to take on a shape more familiar to us. The advent of industrialization brought about significant changes in trading practices. Companies began issuing shares of stock to raise funds for expansion, and the public had an opportunity to invest in these businesses, thus becoming partial owners. The stock market became a central hub for economic activity, reflecting the overall health and prosperity of an economy. Then came the digital revolution, a seismic shift that transformed the stock market beyond recognition. The advent of electronic trading platforms in the late 20th century made it possible to buy and sell stocks with the click of a button. High-speed internet and advanced algorithms have since revolutionized the way we trade, making it faster, more efficient, and accessible to anyone with a computer and an internet connection. Now let's take a moment to appreciate the sheer magnitude of the global stock market. It's a colossal financial engine that fuels economies worldwide. The stock market is not just about buying and selling shares. It's a platform for companies to raise capital, for investors to grow their wealth, and for economies to gauge their health. It's a testament to human innovation, a complex system born out of a simple idea to create a marketplace for investment. Looking forward, the stock market is bound to continue evolving. Technology will keep pushing the boundaries of what's possible, and regulatory frameworks will adapt to keep pace. We might see more automation, more integration with other financial sectors, and even more democratization of the stock market. Perhaps blockchain technology will play a significant role, or artificial intelligence will redefine trading strategies. The possibilities are as vast as they are exciting. When we step back and look at the grand scheme of things, it's clear that the stock market is more than just numbers on a screen or abstract financial concepts. It's a living, breathing entity that evolves with our societies, shapes our economies, and influences our lives in ways both seen and unseen. As we continue to innovate and adapt, who knows where the stock market will take us next? But one thing is certain, it will always be a vital part of our financial landscape.